objectives of accounting, then how the functioning of the accounting, then the basic bookkeeping and accounting, then how system of the accounting, then various branches of the accounting principles, their concepts and the conventions. Also, we will studied or discussed here. Then the fundamental accounting assumptions are there. Some of the accounting procedures are there, processes are there that we will discuss here. Then the types of accounts, what are the types of accounts are that we will discuss here. Then rule of double entry system is there. Then journal, ledger and subsidiary books are there. Then last one is the trial balance. So first of all, we will discuss one by one. So the introduction, what it is, accounting has a rightly been termed as a language of the business. So the aim of the accounting is to meet the information needs of the rational and sound decision makers, and thus called the language of the business. In every business, different types of activities are there, which is commercial activities, then financial activities, then accounting and management activities, etc. So they are performed in the different manner. So out of these, accounting activities is very much important in the every business concern. So other activities, the business cannot be performed without accounting activities. So it is an important and essential to study this system. In this unit, we shall discuss the meaning, objectives, and various branches of the accounting. It is intended to identify various users of accounts and function of the accounting. We shall discuss again the different accounting concepts, conventions, whatever the assumptions are there, and the observe their implications while recording the transactions and events in the businesses. So lastly, we shall discuss the fundamental assumptions of the accounting. Then, what is the meaning and definition of the accounting? Accounting as an information system is the process of identifying, measuring, and communicating the economic information of an organization to its user who need the information for taking the decisions. So, accounting is often called as the language of the business. The basic function of the language is to serve as a means of the business operations to various parties who have some stake in the businesses. So we can say that there are different kinds of stakeholders are there related to the business, such as some of the owners are there, some of the shareholders are there, some of the customers are there. Also, the government interference is there. So they are the stakeholders of the businesses, which is a beneficial of the business operations here. So nowadays, a well-performed, well-informed management is a necessary for the survival of any organization or any businesses or any companies. So the management must have to take the right information at the right time in the right way to keep due to control over its business affairs. So it is therefore essential that all transactions should be recorded in a business is in such a manner that the trader may be able to find out easily and accurately answers about the some questions, that is how much he owes to others when he purchased the goods on the credit basis. Then the how much do not do the other owe to him, that is also important. Then the what is his functions, financial position in terms of assets, their liabilities, and overall financial position. Then what is the position of his profit and loss account and their financial statements, if any, during the any particular period of time or any particular date. So that is the meaning of the accounting. Then definition of the accounting. In 1966, a widely accepted definition of accounting was given by the International Accounting Association and American Association, which is treated as the process, accounting as the process of identifying, measuring, and communicating the economic information to permit informed judgments and the decisions by user of the information. So the basic information, basic definition given by the Association of the International Accounting and American Accounting Association, that the process is identifying, measuring, and communicating the economic information, that is financial information. So again, according to Smith and Ashburn, given the definition as accounting is the science of recording and classifying the businesses, transaction, and their events primarily of a financial character, and the art of or making significant summaries, analysis and interpretation of those transactions and events, and communicating the results to a person who must make decision or form a judgment. So the basic definitions given by the Smith and Ashburn. So this definition is also one of the important factor in respect of the accounting. Then what are the objectives of the accounting? Now we will learn about the accounting objective of the accounting. The main purpose of the accounting is to identify business transactions of a financial nature and enter them into a proper books of accounts. So the accounting records can also be used as a evidence of in the any court of law. So what are they? They are objectives. There are 6 objectives are given here. First one is a systematic record. So the basic objective of accounting is to record the financial transactions systematically. So these recorded transactions are further classified and summarized logically for the preparation of the financial statement. So the systematic record should be there in the accounting procedure. Then the second one is the ascertainment of the results. So to ascertain the results of the business during the particular time is a purpose of the accounting. So for this purpose, the profit and loss account and balance sheet is to be prepared by the any business concern or business organizations. So next one is provide information. So we can discuss here that the different stakeholders are related to the business organization. So there are various interested parties in the businesses. So accounting provides the information, actual information to the internal and external parties also. So what are the internal parties? Those who are working in the business house, they are the internal parties, and those who are the outside of the business, they are the external parties. So they have taken the information from the accounting point of view. Then the protect business properties. So accounting provides the information to the proprietor to protect his properties from the unjustified and unwarranted use. So the proprietor can ensure that the funds of the businesses or the finance of the businesses are not unnecessarily vested or the keep idle. So this important, this is the major objective of the accounting. Then the decision making. So the accounting collects, analyze, and summarize and the reports of the information to the management to facilitate the rational decision taking in their businesses. So the last one is the financial position. Accounting information is important in respect of the businessman. So the businessman must know his financial position. This purpose is achieved by the preparing the position statement, that is the balance sheet. So here they are the important financial statements in the accounting procedure. So these are the 6 major objectives of the accounting, which will asking in the examination as a short note that the what are the objective of the accounting and define accounting. So you should remember that the points objectives. So the next is the functions of the accounting. So the an analysis of the definition brings out the some of the functions of the accounting. That one is a recording. This is the basic function of the accounting. So it is concerned with the recording of the financial transactions, whatever happened in the business. So the recording is one of the major function of the accounting system. Then the classifying, it is concerned with the systematic analysis of the recorded data so as to accumulate the transactions of similar type of at one place. So the work of classification is done in the ledger. So it is one of the most important function of the accounting. Then summarizing, it is concerned with the presentation of classified financial data in a manner of understandable and useful to the interested parties that we will discuss here. It includes preparation of the trial balance, then income statement and the balance sheet. So it is also one of the important function of the accounting. Then next one is the interpreting. So the recorded financial data is analyzed and interpreted in a manner that the users can make the meaningful judgment about the financial position of the businesses. So everyone can understand whatever the financial position or financial results shown of the businesses. Then the evaluation, it is concerned with the assessment of the performance achieved in relation to the targets. So the evaluation is also one of the important functions, or assessment is one of the important function of the accounting. Then stewardship, accounting for the users of owners funds wherein the management and owners are separated. So the public limited company is one of the example of the that function. Then the measurement, accounting measures past performance of uh, the businesses and the organizations, and despite its current financial position. So the measurement is also one of the important function is there. Then the government regulation and taxation. Accounting provides rendered the information to the government about the exercise control on the entity as well as collection of the tax of the revenues. So accounting in this way identifies the business transactions, records them in a proper books of accounts and prepares ledger accounts. From the ledger account, trial balance is prepared and finally financial statements are to be prepared by the businesses. So these are the major functions are given in the accounting system. So next, what is the difference between the bookkeeping and accounting? So some people take bookkeeping and accounting as a synonymous terms, but they are different from each other. Accounting is a broad subject, whereas the bookkeeping is a part of the accounting. So is concerned with the record keeping and maintenance of books of accounts. So difference should be uh, seen here. So first one is it is a primary stage. So bookkeeping is a primary stage. Then the accounting is the secondary stage. Second one is the main objective of the bookkeeping is to maintain the systematic records of financial transactions. And in respect of what accounting, the main objective is of accounting is to ascertain the net results of operations and financial position and communicate information to end users. So end users are different kinds of the parties related to the business organization. Then third one is managerial decisions cannot be taken with the help of these basis records. So the bookkeeping is not useful to taking the decision of the management, but the management can take the decisions on the basis of the accounting records. Then fourth one is bookkeeping work is performing by junior staff, but the accounting work is performed by the senior staff. So the level of the management is there. So the as per the level of management, they are performing their work by the staffs. Then higher level of knowledge is required in respect of the is not required in respect of the bookkeeping, but in respect of the accounting, it requires higher level of knowledge. Then sixth one is given as it does not cover designing of accounting system. So in respect of accounting, it covers designing of accounting system. So there are some pro formas or formats given by the our standards, so that the business having follow. So the seventh is a financial position of the business cannot be ascertained from the books of bookkeeping, but in respect of accounting, financial position of the businesses is to be ascertained. That is the trial balance, then the trading account, then the profit and loss account, and the last one is the balance sheet. So these are the difference of the bookkeeping and the accounting. So it is also asking in the your examination as the what is the difference between bookkeeping and accountancy for the short notes. Then system of accounting. There are two different systems of accounting for recording the business transactions. One is the cash system and second one is the mercantile system. So under this system, under the cash system, only actual cash received and cash paid is to be recorded. So no entry is made for the receipt and payment which is merely due. However, any payment outstanding will be accounted for at the year end. Government accounting is based on the this type of a cash system. So professional people like lawyers, chartered accountants, etc., maintain the accounts under this system. So they are maintain their accounts with the help of the cash system accounting. Then the mercantile law, mercantile system. So under this system, entries are made not only for actual receipt or payment of cash, but also amounts having become due for payment or receipt. In other words, we can say here the both cash and credit transactions are recorded in the books of accounts. All commercial establishments and even non-trading concerns follow this kind of a mercantile system accounting for their maintaining books of accounts. Then the various branches of accounting, the various branches or subfields of accounting are, one is a financial accounting, second one is a management accounting that we studied here in the big MBA. Then the third one is the cost accounting, fourth one is the social responsibility accounting, and fifth one is the human resource accounting. So the every accounting procedure is the different for the different branches. So the first one is the financial accounting. What it means, the this accounting is mainly confined to the preparation of financial statements for the interest of the parties of the businesses or the organizations. It is the original form of accounting. The final step of this accounting is to prepare the profit and loss account and the balance sheet. So these are the financial statements called by the financial accounting procedure. So what is management accounting? This accounting provides necessary information to the management for discharging its functions such as the planning, controlling, and the taking the decisions in the right way on right time. So it covers various areas such as cost accounting, capital expenditure decisions, then the dividend decisions, then the capital structure decisions, then capital budgeting decisions, etc. So next one is the cost accounting. This accounting is the process of accounting for cost. The primary function of this accounting are to be ascertain a cost of a product, and it will be helpful to the management to control the cost. So the cost accounting is one of the branch of the accounting used different kinds of a manufacturer in the business line. Then the social responsibility accounting, it is the process of identifying, measuring, and communicating the social effect of a business decisions to permit informed judgment and the decisions by the users of information. So accounting for environment and ecology is the part of the this particular social responsibility accounting. Then last one is the human resource accounting. This accounting is an attempt to identify the quantifying and the reporting investment made in the human resources of the businesses that are not presently accounted for under the conventional accounting practices. So there are some accounting practices are there where the accounting is maintained. So these are the different branches which is followed by the different kinds of business concerns and organizations and companies. Then accounting principles. Accounting principles should have to fulfill three criteria, that is feasibility, objectivity, and the relevance. So the feasibility to the extent that it can be applied without undue complexity or the cost. So that is important. Then objectivity to the extent that the accounting information is not influenced by the personal bias and associate entities. Then relevant to the extent which results in pertained information. So the accounting principles are those rules of actions and conducts which are adopted by the accountants universally in recording accounting transactions. So the according to the American Institute of Chartered Public Accountants, the principles which have substantial authoritative support become a part of the general accepted accounting principles. So the accountants worldwide have developed the rules and conventions necessary to define the accepted accounting practices at a particular time. So the accounting principle is very much important in the accounting procedure. Now the accounting concepts, the term accounting concepts include those basic assumptions and conditions upon which the science of account is based. A concept is a notion. So the term concept denotes the basic assumptions. So the any abstract idea serving a systematically function is termed as a concepts. So the accounting concepts are such ideas as are commonly associated with theory and practices of the accountants. These are the concerned with the maintenance of the accounting, and accounting concepts can be classified as a in the 11th. So the first one is a separate business entity. This concept states that the business enterprises is a separate identity apart from its owner. So the from the accounting point of view, business is kept separate from a and its investors and their owners. So this concept helps in keeping private affairs of a proprietor away from the business organization. So the separate business entities is also one of the important accounting concept which is applied by the different kinds of the business in the worldwide. So the second one is a going concern concept. According to this concept, it is assumed that a business unit has an equitable prospect remaining in operation long enough for all its account plan to be carried out unless and until it has been entered into a state of liquidation. So it is one of the important going concern concept is termed as a fundamental accounting assumptions, and if the same is not followed, the fact should be disclosed in the financial statement with the reason. So it is also one of the important concept followed by the businesses. Third one is a money measurement concept. According to this concept, the transactions which can be measured in terms of money are only recorded in the books of accounts. So the transactions and events that cannot be expressed in terms of money are not recorded in the books, in the business books. For example, if an organization has a team of a efficient and dedicated employees, it is definitely an asset of the organization, but the monetary measurement of their efficiency is not possible. So the it is not recorded in the respect of the monetary term. So this kind of a money measurement concept is also applied in the various business entities. Then the dual aspect concept, this is the basic accounting. According to this concept, every business transaction has a dual effect. For example, if Vijay starts a business with a cash of rupees 1 lakh, there are two aspects of this transaction, that is asset account and capital account. In this, business gets cash as an asset, and on the other hand, the business owes 1 lakh to Vijay on his capital. So this can be expressed in the form of equation as a equity or capital is equal to cash. So 1 lakh is equal to 1 lakh. So this kind of a example given in your sim material, you can refer that. Then the cost concept, according to this concept, the value of the asset is to be determined on the basis of their historical and acquisitional cost. So it is assumed that the transaction, particularly the balance sheet items, should be recorded at their acquisition price and not at their present worth. So it is closely related to the going concern concept. This concept does not recognize the realizable value and the replacement value or the real worth of an asset during that the particular period. So this is also one of the concept used by the manufacturer while the accounting is prepared. Then next one is a accounting period concept. Although the going concern concept stresses the continuing the nature of the business, it is customary to divide its life into the chapters known as the accounting periods. So the accounting to this concept, the life of the business is divided into appropriate periods for studying the results shown by the businesses after each period. So the period should be defined in this concept from 1 year, one financial year. So April to March, again April to March. So this also concept is applied in some of the businesses. Then the realization concept. According to this concept, revenue is recognized only when sale is made. Then the strictly speaking, revenue earning is only a gradual process, and it starts when the raw material is purchased for the production and ends with their sales. So if no sales take place, no revenue is concerned. So sales is considered to be made when the property of a goods passes to the buyer and he is legally liable to pay. So there are certain exceptional cases are there for this concept. So somewhere higher purchase and sales and contract accounts are there in which the realization concept is not applied. Then next one is a matching concept. According to this concept, the expenses incurred in a accounting period should be matched with the revenues recognized in a particular period. For example, if revenue is recognized on all goods sold during the period, the cost of those goods sold should also be charged to that particular period. So, to ascertain the profit made during the period, it is necessary to match the revenue of a period with the expenses of that particular period. Then and then the company will matching the to finding to ascertain the actual profit of the company. So the matching concept is also important in the respect of accounting. Then accrual concept, accrual system is a method whereby revenue and expenses are identified with a specific period of time. In cash system of accounting, the transactions are recording only if they are actually received or paid irrespective of its accounting period. But in accrual system, the expenses and revenues relating to the that particular accounting period only are considered. For example, Mr. Vijay purchases machinery of rupees 1 lakh by paying cash rupees 50,000 and sells at rupees 1,20,000 to a customer, of which customer paid only 70,000. In case his revenue is a 1,20,000 and not a 70,000. So the cash received as the same case, same expenses काय आहे की या ठिकाणी rupees 1 lakh and not rupees 50,000 cash paid. So the accrual concept based on the profit or rupees 20,000. From this concept, one question arises that the segregation of the capital and revenue items is there. So any increase in the owner's equity as a resulting from the business operations is called as a revenue, and the any decrease in the is called as the expenses. So therefore, excess of revenues over expenses is termed as a income, and excess of expenses over a revenue is called as a losses. So this is also accrual concept is followed by the some of the businesses for their maintaining the accounting in the business. So next one is the rupee value concept. This concept assumes that the value of rupee is constant. In fact, due to the inflationary pressure, the value of rupee so goes on declining. The declining value of rupee is ignored for the accounting purpose, and accounts are prepared on the basis of the old historical costs only. So this kind of also concept applied by the some of the businesses whenever they are necessary. Then the last one is the objective evidence concept. Accounting is dependent upon the facts and figures. So the entities in accounting records, entries in accounting records and data reported in financial statements must be firmly established on incontestable evidence. So according to this concept, each and every transactions recorded in the accounts should be objective and verifiable. So the all the business transactions should be recorded with accuracy, precision based on the factual and objective evidences. So these are the most important accounting concepts followed by the various business entities for maintaining their accounting in the businesses. So next one is the accounting conventions. So accounting conventions are the traditions which guide the accountants while preparing the financial statements of the business enterprises in order to make the language contained in a financial statements clear and meaningful. These are the convention of conservatism. Then second one is a convention of the consistency. Then third one is the convention of full disclosure, and last one is the convention of materiality. So the first one is the convention of conservatism. So according to this convention, accountants are expected to be conservative in their approach while preparing the accounts of the businesses, and they are expected not to take into account the anticipated profits, but provide for all the possible anticipated losses. So in different words, we can say that these practices of the accountants acts as a guard against the personal judgment of the accountant in preparing of the accounts of the businesses. So the some of the for example are there, making the provision for bad and doubtful debts and making provision for the discount on the debtors are the example of the this conservatism. So the valuing the stock at a cost price or a market price, whichever is less, also one of the example of the this convention of the conservatism. Then the not providing discount on the credit, that is one of the example is there. So the next one is a convention of the consistency. According to this convention, accounting practices should be remain unchanged for a fairly long time and should not be changed unless it becomes absolute essential to the change them. So the comparison of one accounting period with the another is possible when the convention of the consistency is followed. So for example, if the stock is valued on the FIFO, that is first in first out method, this basis should be followed year after year. And if a particular asset is depreciated according to the weighted depreciation value method or written down value method, this method should be followed year after year. So the accounting should be maintained with the consistency. The method should be contained with the consistency. That is the this convention of the consistency uh, convention. Then the next one is the convention of full disclosure. It is one of the important convention which is applied by most of the business entities in the worldwide. So what is it? According to this convention, the financial statement should be act as a means of convening and not concealing. So the financial statements must be disclosed to all the relevant and reliable information which they are purport and purport to the represent, so that the information may be useful for the users. So the financial information should be honestly prepared and sufficiently disclosed with which of material interested. So accounting reports are meant for the use of various parties, and these reports should be served for the purpose. So the company law itself make the obligatory on the part of companies to prepare their financial statements, that is profit and loss account and the balance sheet in the prescribed format, so that the maximum possible disclosures can be made by the businesses. So the practices of giving footnotes, references that in the statements is the pursuant of the this particular convention only. So the convention of the full disclosure is one of the important conventions used by the business entities. So the last one is the convention of materiality. So the accountant should attach importance to material details and ignore the insignificant details. So if this is not done, the whole accounting process would become cumbersome and meaningless. So the according to this convention, all relatively relevant items and the knowledge of which might influence the decisions of the users of the financial statements, and thus should be disclosed in the financial statements. So the it is because of this convention, the cost of an asset or its written down value alone is shown in the balance sheet, and not the other information about the assets given in this. So the materiality is the subjective term, and the information become a material if the knowledge of it so would influence on the decision of the informed investor. So this kind of a convention is also used in the manufacturing company. So these are the four major conventions applied by the business organizations for their maintaining and making the financial statements. Then the accounting process, that is a book of account and record. The steps are given here. That first one is a first one is understanding the transactions. Then the second step is related to analysis of transaction. Then third step is related to identification of accounts involved in the transaction. Then the fourth is related to knowing classes of those accounts. Then fifth is application of principle that we discussed here, the rule of these classes of accounts for the appropriate debit and credit. Then sixth is related to making entry in the journal book. Then the seventh one is that journal entry is posting in the ledger account. Then eighth one is balancing the ledger accounts. So balancing figure should be find out or ascertain from that particular ledger account. Then the ninth one is a preparation of trial balance. It's one of the important step. And the last one is the preparation of final accounts. That is the important term, that trading account, profit loss account, and the last one is the balance sheet, that we will call as a financial statements of a business. Then next one is the types of accounts. What are the types of accounts? In order to complete the process, one must know what are the types and what are the classes of the accounts of their corresponding rules. So there are three types here. That one is a real account, then second one is a personal account, third one is a nominal account. So the real account accounts exist in a physical as well as the non-physical nature. So these are the assets account. So the tangible real accounts and intangible real furniture, machinery, building stock. These are the example of the tangible assets or tangible accounts that we will posted in the financial statements. So the again next is the intangible real accounts, that these are the related with non-physical things such as goodwill, patents, trademarks, copyrights, that also we will posted in the financial statements. Those things cannot be seen, felt, or touched. However, this can be measured in terms of money only. So the second one is a personal account. These accounts which are in the name of an individual or a firm or a company, association, any trust or an organization are the personal accounts. So the personal accounts appear when an event or transactions results in increase or decrease in the dues. So balances of these accounts shows the amount of payable or recoverable. So the example of these accounts are the so Sham's account, then the ABC Company Limited's account. That is the accounts may be savings account or the current accounts. So the next one is the nominal accounts. So the items neither affect increase or decrease of assets, real, nor increase or decrease dues as a personal account or nominal account. So the debit or credit effect of nominal account does not affect any asset or liability. They are in the nature of income and expenditure. So all the nominal accounts are revenue accounts. Benefits and use of these accounts are enjoyed for a period less than the one accounting year, that is financial year. Therefore, they are taken as in the trading account, profit and loss account. So it is recorded in that two accounts only. So for example, nominal accounts are the accounts that we can say salary account, then the insurance account. These are the whatever the expenses are there, they are comes under the nominal accounts. Then the what are the rules of double entry system? In respect of real account, we can say that debit what comes in, then credit what goes out. Then in respect of personal account, what is rule thumb rule is there? So debit the receiver and credit the giver. So in respect of nominal account, debit the expenses or losses and credit the incomes or gains. So these rules are followed by each and every organization wherever they are maintaining their books of accounts in their business transactions. So it is one of the important rule of double entry system. Then classes of accounts and their rules that we discuss here now. Real accounts, which is related, they are related to the only assets. Then the personal accounts, which is individual or firms or organizations accounts are there. Then the nominal accounts is related to the expenses and incomes, whatever the transactions made by the organizations in their businesses. So how they are affected in the transactions that we seen here. So now the journal. What is journal? Transactions are recorded in the first journal. So in chronological order, therefore it is called as the book of original and prime entry. So the table shows that you can see in the specimen of the journal that the first column is related to the date. So date is used to record date of the transactions. So generally the accounting year is written at the beginning of the column. So it is followed by the month and the date. So it is no necessary to write year uh, and the month of each entry. Only the date will go on the changing. So when the page or year or month is changed, there is a need to rewrite the year or the month. So the date is also important while the journal entries are making. So second column is related to the particulars. So it is used to write the names of accounts and the narration of the that particular at the end of this column. In the next line, after leaving the some space, whatever the name of the account to be credited is written prefixing the word to and the after recording uh, important in respect of the uh, that particular journal entry. So the next one is a column C. LF indicates the page number of the ledger book on which the particular account is to be opened, and it is written when the ledger posting of the entry is made by the accountant. Then the column D is related to debit rupees. Debit column, the amount of an account is written in this column in front of the account which is debited in the journal entry. Then the column E is related to credit rupees. It is also the amount of an account is written in the this column in front of the account credited in the journal entry. So this is the pro forma of the journal entries made by the accountant or the any cashier or any staff of the business organizations. So the steps are given here. First of all, you should understand about the what kind of a transaction is there. As we can say here, different kinds of accounts are there and the rules are there. So you should understand what kind of what type of transaction is there. Then next step is analyze the transaction analysis of the transactions. Then the third one is the identification of the accounts. Whatever the transactions made by the accountant, that you should identify the what the accounts comes from that transaction. So that is step is also important. Then the fourth is knowing classes of those accounts. Then the application of principles, rule of these classes of accounts for the appropriate debit and credit is also important. Then the make the entry in the book of journal. So it is important procedure of journalizing. Then the ledger account, what is it? Ledger account is an important part of the accounting procedure. After the journal entry made, the ledger account should be opened by the accountant as per the their requirements. So the accounts are opened in the ledger book, hence they are also called as a ledger account. So after recording transactions in the journal book, it is necessary to prepare the ledger account. So the account is a statement showing that data of a transaction for a whole accounting year for a specific account head. So the data in journal and that in ledger accounts are the same. However, the data is classified according to its kind and recorded according to in concern of that particular account. In short, it is the classified record of transactions maintained on the basis of journal entries. So whatever the journal entries made by the accountant, that should be posted in the ledger account. So the format of the ledger account is given here. First column is date. Date column is used to write year, month, and date of the particular that transaction. Then second column is related to the particular column is used to write the name of the other accompanied account affected in the journal entry. If this account is debited, the name of the accompanied account is written on the side of the debit. So another is to be given in the credit side. Then folio column is used to write the page number of the journal from which the posting to be made in ledger. Then amount column on debit and credit side is used to write the amount of the transaction that is recorded in the journal entry. So this is the important ledger account format that used in the different accounting procedure. Then the subsidiary books, different subsidiary books have to be used to maintain the books of accounts in the accounting procedure by the different business entities. So we have to know what are the subsidiary books. So first one is the cash book. It records all the transactions, all the receipts and payments in cash or by check are recorded in this book. So the cash book is important, which is used by different kinds of business organization. Then the purchase book, it is also called as a purchase day book and records credit purchases of goods only. So purchase book is there. Then the sales book, this records credit sales of the goods. Then purchase return book, this records return of goods from to the supplier. This is also called as a return outward book. Then sales return book, it is recorded return of goods from the customers. This is also called as a return inward book. Then bills receivable book, it records transactions of bills receivable, and bills payable is record items related to the bills payable. It is clear that the similar type of transactions are recorded in a separate book. So next one is the journal proper. This the transaction which do not find place any of the above books are recorded in the journal proper. So these are the subsidiary books which is applied in the uh, business organization. Then the trial balance, in order to see the arithmetic accuracy of the accounts of all the accountants, prepare a table showing the accounts that the show debit balances as well as the credit balances. So the this table is called as a trial balance. It is the summary of all the ledger balances on a particular date. So it is the technique of a double entry bookkeeping system that there are corresponding debit and credit effects in each journal entry. We have seen in the ledger posting that the every amount is recorded on the debit side of an account has corresponding entry on the credit side of the some other account. So therefore, the total of all debit balances must agree with the total balances of the credit side. So, however, if there are any error in recording the figures, these totals may not be agreed. So, we are to find out the errors and rectifying that errors. So, in order to make the all the ledgers accounts arithmetically correct, so we should prepare trial balance in the businesses. So there are two methods are there of trial balance preparing. So first one is a total method. In this method, total of both sides are shown separately of each account. And the second one is a balance method. In this method, the balance of each account is shown. This method is more convenient, simple, and easy. for the accounting process. This saves the time and labor also. Therefore, the majority of the accountants of the business organization use this balance method for preparing the trial balance. So, we have used this method in the different accounting procedure. So this is what the today's session. So final account we discussed here. In the next session, with the help of the different problems, so how they are solving uh, in the format of trading account, then the profit and loss account as an income statement, and the finally one is a balance sheet as a financial position statement. So we will discuss in the next contact session. Today we stop here.
थँक्यू सर.
काही काही शंका असतील तर विचारू शकता तुम्ही, कारण हा पेपर थोडासा असं आम्हाला समजतंय, पाठीमागचा एक अनुभव आहे की अवघड जातो बऱ्याच जणांना, पासिंग पर्यंत जात नाहीत. कारण तुमची जी स्ट्रीम आहे प्रत्येकाची वेगळी आहेत. काही जण आहेत ते BA कडून आहेत, काही जण BSc मधून आहेत. BCom असतील तर किंवा MCom वगैरे याच्यातून या फील्डमधून कॉमर्समधून आले असतील तर काही अडचण येत नाहीये. उद्या आपण प्रॅक्टिकल प्रॉब्लेम सॉल्व्हिंग करूया. फक्त मला एक कन्व्हिनियन्स तुमचा पाहिजे कशा पद्धतीने की आपण मराठीतून जाऊया थोडंसं आणि स्वतः समोर एखादं पेज समोर ठेवा, म्हणजे जेणेकरून काय आहे की आपल्याला ते प्रॉब्लेम सॉल्व्ह करत असताना तुम्ही स्वतः सुद्धा त्या ठिकाणी प्रॅक्टिस करू शकाल. कारण काय आहे, या पेपरमध्ये मोस्ट ऑफ द प्रॉब्लेम्स तुम्हाला विचारले जातील पेपरमध्ये, आणि ते प्रॉब्लेम तुम्हाला सॉल्व्ह करणं अवघड जाऊ नये याकरिता तुम्ही आतापासून प्रॅक्टिस केली पाहिजे. चालेल, थांबूया आपण मग आज.
हां हां सर.